let's catch you up on a couple stories that should be on your radar today. It is time for Rapid Fire. Here to break down the headlines and talk more about these markets, John Spallanzani from Miller Value Partners joins us, along with CNBC's Morgan Brennan, Bill Griffith, and Kate Rogers. It's great to have everyone here. It does look a little like a game show setup, but that's for another day.
Yes.
Definitely not today.
We're not playing games today, that's
no,
for sure.
we are not. Markets have been whipsawed all morning and now afternoon by this ongoing trade war with China. The sell-off really began after the president tweeted just before 11 this morning that he will be responding to the latest round of retaliatory tariffs from China sometime this afternoon. No word on that yet, but the president tweeting in part, "Our great American companies are hereby ordered to immediately start looking for an alternative to China, including bringing your companies home and making your products in the USA." Trump also specifically called out FedEx, Amazon, and UPS by name to refuse deliveries of fentanyl from China, which I'm curious, Morgan, do they even have there must be some kind of checking at the border, right, for stuff that's coming into the U.S.
Oh, yeah, there are very specific regulations that are in place for FedEx, UPS, to a certain extent, USPS, the Postal Service as well, any of the carriers that are moving stuff cross-border. And to that point, FedEx and UPS actually both have already come out with statements and talking about how they work closely with the regulatory authorities to monitor prohibited substances. That being said, there have been quite a number of investigations over the years, including one just this morning from the Washington Post, looking at how things like substances like fentanyl are getting across the border, and the Postal Service seems to be essentially the biggest culprit in terms of how things are getting shipped and where shipments are getting missed.
Than FedEx or UP. And it's interesting, this morning on Squawk Box, we were talking to former FDA Director Scott Gottlieb about the issue with vaping, which we just heard there's been a death now from these. A lot of the products appear to be involved with some Chinese imports, stuff that's kind of being, it's not legitimate products, so to speak. And Gottlieb said if he were still at the FDA, he would order Customs and Border Patrol to do more on this front. So clearly, if you really want to do something about this problem, you should be able to. I guess that's the smaller salvo, though, of what the president had to say about ordering American companies out of China.
That wouldn't be the headline necessarily.
Yes,
I thought Steve Leisman brought up an interesting point that I hadn't thought about, that there might be some confusion on the part of the president that the meeting in Jackson Hole was a policy meeting, which, of course, it is not. Maybe he was expecting a rate cut today and didn't get it, and that would add to his furor when you get these new tariffs from China and expect the Fed to maybe respond in kind in some way, and he didn't get that. So,
right, so he criticized Powell 6 or 7 minutes before announcing these actions or these orders against China. It clearly seems like a cause and effect.
Absolutely, and to use the word enemy, not only against our own Fed chair, but now against the man that you're negotiating with on the trade war, that's I know sometimes talk can be cheap, and you in the heat of the moment you say something you might not intend.
No, but we all know here, no words matter.
But when you're talking at this level, you have to be careful what you say.
I will just note on that, though, that we have essentially already labeled China an enemy. All you have to do is look at the defense strategy and how we're rebuilding our military, and we do see China essentially as a near peer threat, so to speak.
I don't think Powell's on that list.
But
yet,
no, not at all, not at all.
Yeah.
But I'm just saying, I think the national security piece of it.
I know. It's no laughing matter. All right, let's drill down on a couple of other companies that will feel the pain from these tariffs that China announced. So China's on autos saying it will impose a 25% tariff on U.S. cars and a 5% tariff on parts and components going into effect in December. They had paused these tariffs back in April. Analysts at Credit Suisse say Tesla and Ford could be among the hardest hit companies. Tesla shares are down nearly 4% today. Ford down nearly 3%. How much of a risk is this, Spallanzani? These China tariffs, the total dollar amount is only $75 billion on the U.S., but the market reaction, it tells you there's a much more at stake here.
Well, I think that once again, the U.S. economy is a super tanker, right? It takes a lot to make us go off course. So right now, we're kind of going strong. As everybody knows, we look to unemployment, a couple other indicators. But, this whole fight has the potential to have a negative feedback loop the longer it goes on, similar to the 1930s, right? Smoot-Hawley and what happened back then. So you have a tit-for-tat situation, then you have negative headlines, you have the stock market very volatile. And, I think that even though the U.S. economy is a service-oriented economy, those are some of the things that we're watching very closely now, in that if we start to see layoffs, not at GM, but cruise lines, bookings go down. You start to see
Ford is especially vulnerable in that case. You know what I didn't realize, and I read this morning, U.S. Car exports to China are down 50% in the last year. So already we've seen a huge impact as a result of the previous tariffs that were put into place, and now we're going to get more.
And their marketplace is slowing, period, in China.
This escalation today, after hearing that earlier in the week the president was reportedly concerned about a potential recession in the next year, I mean, this policy, these announcements today, I mean, we're calling it policy. Who knows what he'll announce this afternoon? But you know, they were talking about a payroll tax cut earlier in the week. Now this, I mean, where is this going?
And we know that people, his advisors, many or most of them have said, you know, you are contributing to this, you know, whether he believes it or not, cares or not, or just thinks that the greater good is the point. I mean, it's an undeniable cause and effect in the markets.
Yes, and I think, well, obviously, the volatility is not good for anybody. And I think as we start, you know, the super tanker only has so much before it starts listing, right?
Yeah.
Bullard said it was a sea change. But if you start to have problems now, once you get within a year of the election, which is, you know, 2 more months, you can't change that. And he's not going to be a second-term president because of that. So actually, Bill said this morning on our call that we should have, you know, he should put a moratorium on tariffs until after the election. And then say
that. And then
say, you know what, we'll negotiate now to the election. If nothing happens, then it's kind of like...
Very interesting.
Yes.
Because here's another area, tech. Shares of Apple falling more than 4% after the president threatened this retaliation just days after Apple CEO Tim Cook, the president said, made a very compelling argument that new tariffs would hurt that company. We want to bring in Josh Lipton for more, Josh, especially as the president's saying to U.S. companies that do business there, bring it home.
Yeah, so that's exactly right, Kelly. Apple in the red here, as President Trump says he is now ordering American companies to look for alternatives to China. Now, remember, Apple does all its design work here in the U.S., so that would include cities like Cupertino and Austin, and recently reminded us that it's responsible for creating and supporting 2.4 million U.S. jobs. But much of its assembly work is in China, where you have millions of Chinese putting together different parts of iPhones and iPads. When the company last reported results, Tim Cook told me that he had made no significant changes to his supply chain. Now, perhaps helping Apple here as it navigates these tensions, though, you mentioned it, Trump's relationship with Cook. Just this week, the president praising him as a great executive, Kelly.
Yeah, Josh, I appreciate it. We have that moving, John. We also have the chips, the semiconductor stocks, Micron, NVIDIA, Intel, all down. And we had just talked about how there's a lot of time until September 1 to resolve the situation. Now it is going the other way.
Yeah, and I think that, well, in terms of Apple, I don't think Tim Cook is going to have trouble finding a place for his supply chain anywhere else in the world, right?
But it's a huge supply chain, specialized
and it doesn't
chain.
happen. You can't do this
overnight.
I know you're not going to do it overnight, but the fact is that, you know, then Apple would be down again. You know, last time we spoke, it was down to 194. You said, would you buy it? I said, yes, it went up 10%. I think that, you know, Apple is Apple, and I think
would
that...
you hang on to it here?
I think, well, if it dips again, I think you still buy dips because you have Apple buying back a tremendous amount of stock, and you have Warren Buffett buying a tremendous amount of stock.
Right, but if Apple has to shift its supply chain, I mean, how seriously are investors supposed to take?
Well, first of all, we have 5G rolling out, right?
Yeah.
So they have to shift their supply chain for 5G tremendously, and that's going to be a huge upgrade cycle that's going to affect chips, Apple, everybody else. So, you know, again, you're not going to get a free upgrade to the 5G on your phone, and you're going to have to go out and buy a new $1,000. Probably the price point is going to be $1,200, $1,500. Who knows what it's going to be?
Really,
Yeah, and I was going to say the fact that we're seeing the slide in semis again. Yes, it's the tariffs and the China trade war. It's also what this means longer term for the dynamics with Huawei. But also, semis are exposed to every aspect of the economy in some form or fashion. And it's also, I think, reflection increasingly on where we're at in terms of global economic growth.
I want to break in with some news from the National Retail Federation. They're weighing in on the tweets today. This is, again, the National Retail Federation responding to Trump's orders this morning for companies to move operations to the U.S. The NRF saying for years, retailers have been diversifying their supply chains, but finding alternative sources, is what Kate was just saying, is a costly and lengthy process that can take years. It is unrealistic for American retailers to move out of the world's second largest economy, as 95% of the world's consumers live outside our borders. Our presence in China allows us to reach Chinese customers and develop overseas markets. This allows us to grow and expand opportunities for American workers, businesses, and consumers.
Reality check.
Yes.
Wow.
Reality check.
That's with the negative feedback loop, right? So you just read that now. I'm sure that'll be on the pages of the paper tomorrow, and you have people waking up this weekend and say, oh, not to mention what Trump's going to say is going to say his tweet to China going to be before 4 o'clock, before the market closes? So that's another reason why we have the volatility going into the close. Who wants to stay long when he might have his measures come out of 405?
But as they said, costly and lengthy process. It's not that companies aren't considering it. Of course, they've been considering it. Of course, they're looking elsewhere. It's not possible to do overnight. This is something that's going to take a long time to build out. For huge companies like Apple, also smaller companies, it takes a long time to find the right place to do business.
And the point they make, which is interesting, is that if you move production to the U.S., it's not just production for the U.S., it's global
Everyone
production.
else, exactly.
We can sell for a lot higher prices than most other countries, so they're forcing that up while also still having to sell
One of the
markets.
alternatives often discussed is Vietnam, and we've been doing a series of stories on Nightly Business Report about how Vietnam is maxed out to a great degree. They can't handle the capacity that China would be able to handle. They don't have the skilled labor involved, and they don't have the infrastructure in place. So, you know, to say, well, let's go from China to Vietnam is much easier said than done at this point.
There's another piece to all of this, especially when you look at very globalized companies and the fact that they have multiple supply chains or production lines throughout different parts of the world. Part of the reason they did that was maybe cheaper labor, you know, cheaper costs of doing business. But the other piece of that is because many of those markets had tariffs in place themselves. Right. And so you set up shop to be able to manufacture for that country or that region to bypass the tariffs. The U.S. has not necessarily had those tariffs in place. So now the implementation of them, it'll be interesting to see what this does to production coming back to the U.S. specifically for the U.S. and whether you continue to fragment that.
All of this is just another reminder today that trade policy is complex.
And China is complex because 60% of the people do not believe China is a friend, right? So that was the latest Pew Research report, which is up from 47% last year. So that's probably why Trump is tweeting the way he is, because 60% of the people don't believe China, have China in an unfavorable light. Well, that's an election issue for him.
That's a feedback loop anyway. Why do they believe that?
Because that's what we're
they've been hearing.
So much feedback.
And hearing about. Dow's down 503 points. You didn't get it up, John.
We didn't.
You didn't get it up. I'm sorry. We'll try better next time.